In my last video, I spoke about a person that literally has the final say on whether your mortgage will be approved or not. If they don't like what they see and you get your mortgage application denied, the person you are trying to buy a house from, aka the seller, legally gets to keep your deposit and also gets to sue you for much more money. In this video, we're going to talk about who this person is and what their job is all about. This information can save you from one of the worst financial mistakes of your entire life, no joke. So sit tight and let's go. When you want to buy a house, it's the job of your mortgage agent to assess your financial situation and prepare your mortgage loan application. You can think of it as someone looking at your experience as a working professional and helping you to prepare your resume or your CV. Once your mortgage application has been prepared, your mortgage agent is going to submit your application to the institution that your mortgage loan is going to come from, aka your lender. Your lender can be an A lender, like a big bank, a B lender, usually smaller banks and credit unions. More on that in another video. Now, your lender needs to make sure that giving you a mortgage isn't going to get them into trouble. So they're going to take your mortgage application and hand it over to a financial expert whose job it is to put your application under a microscope and help the lender decide if they will or will not lose money, or worse, get into trouble with the authorities if they accept your mortgage application. So as you can imagine, these checks are very stringent, and it's normally at this stage that buyers get the dreaded request for additional documentation if this financial expert is not satisfied with what they see, or worse, have their file buried under an enormous pile of denied mortgage applications. And that's why they call these financial experts mortgage underwriters. Mortgage underwriters. If you're an underwriter watching this, na play at the play, you're not going to do any, I beg. Now, underwriters have a notorious habit of denying mortgage applications, asking for additional documentation, or asking for large amounts of additional funds a few days to at most a week before the date that you are meant to take possession of the property. And if you fail to take possession of the property because you couldn't, for example, find an extra $100,000 or submit a certain bank statement or a document that can't be obtained within the time frame that they've given you, you're definitely going to lose your deposit and probably get sued for even much more money. And that's why in the next episode, we're going to talk about the documents that the underwriters review to help them understand if they should approve or deny a mortgage application. See you in the next one.